Imagine a world where corporations are racing to accumulate a massive stash of the world's second-largest cryptocurrency, Ether, with the goal of controlling a significant portion of its supply. This is not a fictional scenario, but a reality that's unfolding before our eyes. The corporate Ether acquisition race is heating up, with the world's two largest Ether treasury firms, BitMine and SharpLink, raising capital to acquire more of this coveted digital asset. But here's where it gets interesting. The stakes are high, with BitMine aiming to raise a whopping $24.5 billion through a new at-the-market stock sale offering to acquire more Ether tokens. This move comes as Ether is nearing its previous all-time high, with institutions targeting a larger share of its supply. As of now, BitMine is the world's largest corporate holder of Ether, with 1.2 billion ETH worth $5 billion on its books, followed closely by SharpLink, with 598,000 Ether worth $2.64 billion. But what's driving this frenzy? And what does it mean for the future of cryptocurrency? To understand this phenomenon, let's dive deeper into the world of corporate crypto treasury holdings. The recent capital raise by SharpLink, which completed a $389 million capital raise from common stock shares sold to select institutional investors, is a significant indicator of the growing interest in Ether as a secondary treasury reserve asset. According to the SEC filing, the company intends to contribute substantially all of the cash proceeds to acquire ETH, with part of the $389 million net proceeds also being used for working capital needs, general corporate purposes, operating expenses, and core affiliate marketing operations. SharpLink has raised about $1.4 billion in gross proceeds to date from more than 71.5 million shares sold. The fact that corporations and publicly traded firms are increasingly adopting Ether as a secondary treasury reserve asset has seen the Ether price rise over 21% during the past week, trading at $4,408 at the time of writing. This is just 9% below its old all-time high of $4,890 recorded in November 2021. But here's the part that most people miss. The growing interest in real-world asset tokenization has reignited a renewed interest in Ether as a secondary reserve asset next to Bitcoin. As Gracie Chen, CEO of crypto exchange BitGet, notes, Wall Street firms and the broader TradFi world are just warming up to the idea of Ethereum as a treasury reserve asset. This dynamic may see Ethereum-focused treasury firms amass up to 10% of the total Ether supply in the long term, up from holding just 1% on July 29th, as predicted by Standard Chartered. And this is the part that sparks controversy, the question of whether this level of corporate involvement in the cryptocurrency market is a positive or negative development. On one hand, it could be seen as a validation of the technology and its potential for widespread adoption. On the other hand, it raises concerns about the concentration of power and control in the hands of a few large corporations. So, we ask you, do you think the growing corporate involvement in the cryptocurrency market is a good thing, or does it pose a threat to the decentralized nature of this technology? Share your thoughts in the comments below. As the corporate Ether acquisition race continues to heat up, one thing is certain. The future of cryptocurrency will be shaped by the actions of these large corporations. Whether you're a seasoned investor or just starting to explore the world of cryptocurrency, one thing is clear. This is a space that's worth watching closely. So stay tuned for further updates and join the conversation to share your thoughts on this developing story.